Breaking news from the world of finance. The Oracle of Omaha, Warren Buffett, has just issued a subtle but chilling warning about the stock market. His actions and his words are sending shockwaves through Wall Street. Could the man who predicted the dot-com bubble and navigated the 2008 financial crisis be seeing something the rest of us are blind to? Today, we dive deep into Buffett's latest moves and what they mean for you as an investor. Is a market meltdown on the horizon, or is this just another chapter in the unpredictable saga of the stock market? Stay with us to uncover the truth. Warren Buffett needs no introduction. Known as the Oracle of Omaha, he's one of the most successful investors in history, turning Berkshire Hathaway into a multi-billion-dollar powerhouse. But recently, Buffett has been making headlines, not for buying stocks, but for selling them. In fact, for 3 consecutive quarters, Berkshire Hathaway has been a net seller of stocks. And here's the kicker. Buffett has drastically reduced his stake in Apple, selling nearly 2/3 of his shares over the past year. This comes at a time when Berkshire's cash reserves have swelled to an all-time high of $325.2 billion. So, what's going on? Is this a sign of caution, or is Buffett preparing for something bigger? One thing's for sure. When Buffett makes a move, the world pays attention. And today, we're here to uncover the story behind his latest decisions. Could this be a warning for the rest of us? Let's dive deeper. Let's take a closer look at Warren Buffett's recent actions, and they're nothing short of eye-opening. First, there's Apple. Buffett has often called Apple the crown jewel of Berkshire Hathaway's portfolio, yet over the past year, he's sold nearly 2/3 of his stake. That's billions of dollars pulled out of one of the most profitable companies in the world. But it doesn't stop there. Over the past 2 years, Berkshire Hathaway has divested a staggering $166 billion worth of stocks. That's not just a few adjustments. It's a massive shift in strategy. And where's all that money going? Into short-term treasury bills and cash reserves. In fact, Berkshire's cash pile now sits at an unprecedented $325.2 billion. That's the highest it's ever been in the company's history. So, what does this tell us? Buffett isn't just trimming the fat, he's preparing for something. But what exactly? A market correction? A crash? Or perhaps a once-in-a-lifetime opportunity to buy low? These moves are sending a strong signal. Warren Buffett is playing it safe, even as the stock market continues to climb. And when someone with his track record acts this cautiously, it's worth paying attention. But it's not just Buffett's actions that are raising eyebrows, it's his words. In a recent interview, Buffett described today's stock market as behaving, quote, far more like a casino than ever before. What does he mean by that? He's pointing to the rise of speculative trading, where investors treat the market like a game, chasing quick profits instead of long-term value. Think meme stocks, day trading frenzies, and the unprecedented influence of social media platforms like Reddit. Buffett's concern is clear. This kind of behavior creates instability. It inflates prices to unsustainable levels and sets the stage for painful corrections. And here's the twist. While many are riding the wave of this speculative frenzy, Buffett is stepping back. His strategy is rooted in patience, value, and discipline, the very principles that have made him one of the wealthiest and most respected investors of all time. So, what does this mean for you? Should you be rethinking your portfolio? Should you be worried about a potential bubble? One thing's for sure. When Warren Buffett calls the market a casino, it's not a compliment. It's a warning. And ignoring it could come at a cost. But is the Oracle of Omaha right this time, or is he being overly cautious? Let's explore the bigger picture. Implications for the stock market. So, what does all this mean for the stock market and for you as an investor? Buffett's recent moves and his warnings about speculative trading suggest that he sees significant risks on the horizon. Many experts believe the market could be headed for a correction. Rising interest rates, inflation, and global economic uncertainties are adding fuel to this fire. For retail investors, this raises critical questions. Should you follow Buffett's lead and shift to safer assets? Is it time to take profits and reduce exposure to high-risk stocks? Or could this be a chance to double down on the market while others panic? The truth is, Buffett's strategy isn't about timing the market. It's about avoiding unnecessary risks. His growing cash reserves suggest that he's waiting for better opportunities, perhaps when prices drop to more reasonable levels. But here's the thing. Not everyone has Buffett's patience or resources. So, as you navigate these uncertain times, it's essential to stay informed, diversify, and think long-term. Because in a market driven by speculation, the real winners are those who can separate fear from facts. But let's not forget, Warren Buffett isn't infallible. Even the Oracle of Omaha has been cautious in the past when the market continued to soar. Take the 2010s, for example. Buffett sat on significant cash reserves during the longest bull market in history. Critics argued that he missed out on massive gains while others capitalized on the rally. Could this be happening again? Some analysts believe that Buffett's conservative approach might not align with today's rapidly evolving market. They argue that technology, innovation, and global connectivity have changed the game, making traditional value investing less effective in certain sectors. So, while Buffett's caution is a wake-up call for many, it's also worth considering, could this be a rare instance where the Oracle is overly cautious? And here's the question for you. Do you trust Buffett's instincts, or do you believe the market still has room to grow? Let us know in the comments. We'd love to hear your perspective. To sum it up, Warren Buffett's recent moves are more than just headlines. They're a masterclass in risk management. Whether he's predicting a market crash or simply preparing for the unknown, his actions remind us of the importance of patience, discipline, and staying informed. So, what's your next move? Are you following Buffett's lead, or do you see opportunities where he sees risks? If you found this analysis helpful, make sure to like this video and subscribe to our channel for more in-depth market insights. And don't forget to hit that notification bell so you never miss an update. We're here to help you stay ahead in the ever-changing world of finance. Thanks for watching. And as always, stay curious, stay cautious, and stay in.